if entrepreneurship doesn't grow in India, a lot of our potential isn't realized in the next 10 years.
If not a venture capitalist, what would an alternate path for you be?
I'm not some Joe from the street. I'm a reasonably smart guy.
Yeah.
Ultra competitive. Anyone should sit across me or an animal like me and say, if it works, yeah, he's going to be a tough guy to say this to now. You might remember this. First year into my first job, I decided I'm not going to be a founder. Founder is not. We launched Fund 1. We were trying to raise 50 crores. One guy went to his office, he made me wait. So I started to explain, sir. Stopped me and he said, 50 crores, is it? I said, yeah. You know, your fund size is how much fee I make every year. You have no hope, man. You should just raise the money, give it to me.
Is there a quality that you think a VC must have?
We realize the hard way there's a big problem founders face in India when it comes to capital. VCs are difficult people in general. I'm generalizing. You get 8,000 companies a year, we say just maybe 7 or 8.
What is your personal relationship with money?
As a kid, you don't have any sense of how difficult this is. What are your parents going through? You kind of have to build an appreciation for where you come from.
You've been an entrepreneur in some way, part of a very, very early stage startup, right? And now on the VC side, and you've seen entrepreneurship from a different lens, right, with founders. What does entrepreneurship mean to you today?
Great question. So I've been fortunate that I've worked underneath a founder. So
yeah.
Employee number 3, 4, very early on, built the company from scratch. You know, even if you have a title, that's not all you're doing.
Yeah.
And you get to see how a founder wrestles with the chaos, brings organization. And you learn a certain respect for, okay, I might not agree, but that's the decision.
Yeah.
Let's go for it. And now I worked on the other side of the table of the founder, right?
Yeah.
And here your shareholders,
yeah.
Of course, the founder is a larger shareholder.
Yeah.
When you vibe with the founder the right way, they realize, okay, when I'm the founder of the company, there's 100 people working in this company. I am responsible for them. It's a different hat I wear. When I'm in a board meeting, a founder is a shareholder also, right? His entire future, like 10 years, is in the stock he owns here.
Yeah.
Like a big game changer for him if it works. And I think there we have to work with the founder very differently, right? We can't cross a line on operations, on micromanagement. But at the same time, you bring a very clear sense of the market, where the company is going, governance, a lot of other things. So I think having seen both sides, and I think having seen the other side of the table from both sides as well, it gives you a sensitivity to the fact that if entrepreneurship doesn't grow in India, a lot of our potential isn't realized in the next 10 years. I think it's, in my opinion, besides great leadership, sound, consistent policy, I think entrepreneurship is in the top 5 things I would say we need to be a 10 trillion economy. I would say it's now essential. We can't do without it.
On this point, right, the fundamental mortality rate of startups is very high,
yeah.
right? With more and more founders coming in, and we saw that in the last 2-3 years, right? Access to capital was easy, because of which the number of startups or people who wanted to start up was also very high.
True.
And people go through that cycle, experience success and failure.
Yep.
And the more resilient ones stick around, right? In several senses. Do you still believe that we need these upcycles of multiple people jumping into startups themselves?
I think it's essential because zoom out and see where this comes from, right? We are a civilization of entrepreneurship. Thousands of years documented, our trade routes, our productivity, from cotton to spices to, shipbuilding. We've been pretty good at a lot of this as a civilization.
Yeah.
But I think post-independence, we've had this very unfortunate and brief flirtation with imposed socialism.
Yeah.
That kind of stole private capital, private enterprise from the core of our soul.
Yeah.
Right. So my grandparents, my parents, it was unheard of for them to even think about starting a company. Right. Yeah. That's why when Dhirubhai Ambani did what he did, it was such a big deal because not many people had the audacity to say, oh, I don't care about the rules. I'm going to build a large company. Right. I'm going to create jobs. I'm going to do something interesting. I think fast forward to today, young founders, especially coming out of college in their 20s, early 30s, I don't think we all appreciate how far society's changed to allow us to do this at this scale. I think that's a thing we should celebrate, right?
Yeah.
Some people have a problem with Shark Tank, for example, that they make a mockery of angel funding, whatever. I think it's fantastic that it's on TV, it's on prime time.
Yeah.
A homemaker from Udaipur can come sell earthenware pots, and next week she gets 4 crores worth of orders. Her life is made. Yeah. Right? So I think entrepreneurship is a natural trait in India. I think 45 million SMEs, most of them self-employed, starters of their own, small family businesses. I think that shows you that it's a bottom-up phenomenon.
Yeah.
Right. And therefore, for me, tech startups are a very small corner of that. But tech companies are going to be an unimaginably important part of the fabric of any sovereign country in the world going forward. Right? We need to build our own IP. We need to build our own marketplaces. We need to build our own content, our own hardware. I think this Atmanirbharta that some people mock again, it's essential. I think, especially in today's world, if you're not able to fend for yourself, especially if you're a country of 1.4 billion, it opens up all kind of second and third order consequences that are not good for society.
Yeah.
So I think if we zoom out, for us, tech funding becoming mainstream was essential. I think when it became mainstream, when you had big success stories, then parents were okay with their kids asking them, look, I want to start a company, can I try? I think then the stigma of the families, because when they were growing up, obviously it wasn't acceptable. I think the stigma of the people around you, that goes away, right? I think when you see the Bansals and Bhavesh Agarwal and Baiju for a long time, and you see a lot of these founders succeed and become massive, right? And some of them are going IPO now. I think we've had 28 IPOs. Mamath, for example. I think all of this changes the thinking about what's possible when you're young. And I think that's essential. If our young people, and for so many generations, hope was stolen from them, right? If that continues, there's no way we're going to build anything on our own. So I think this is essential. I think, therefore, I'd rather take what happened, like it goes up, it's a big wave and a crash. Because capitalism is cyclical, that happens all over the world. It's not unique to India. I'd rather take that and the positive consequences it's had on society and the infusion of hope, rather than that not happening and us becoming, like pre-80s, going into another problem, running out of Forex. Yeah. So I take this any day.
I also feel this way to live, the way we have been in India now, also decentralizes capital from the hands of just a few to many. The opportunity creation is massive. The policy framework is supportive, and people recognize that, right? Like there is also a lot of media impetus, like you said, with Shark Tank. So while people may be mocking it, at the end of the day, there's a fundamental reason why it exists, and it's doing so well. And that just encourages more and more people to jump into the foray for some reason. Interesting. You come from a family who's been in the startup ecosystem for a very long time, right? What does a dinner table conversation look like?
Well, yeah, I mean, it's actually funny. I think dinner is usually about three things. And whenever we talk, it's about how far we've come. And it's about just reminiscing on, what my grandfather's father went through, what my grandfather went through on both sides. And if that's interesting, I'm happy to share.
Yeah.
I think it's talking about the future and where we would like to be, what we would like to see. We disagree a lot on what the future is going to be like and what it should be like. But that's good. It gets us to think, right? My mother has a view, my father has a view. So it's good, and they usually don't agree. I think third, it's a sense of gratitude that I could have just stayed in the US, my brother could have been in some other country. A sense of gratitude that we can all be here doing our best work, and and where India is going to be a very exciting opportunity. So it's usually those things.
Is there an ambition that you have for yourself as a venture investor? Right, because it could get diluted at several levels with the noise around, with the family backgrounds, with the success and failure, right? If you were to look at Pranav as an individual venture investor, do you have an ambition for yourself?
Yeah, I mean, I can speak for two motivations that drive my ambition. I was reminded of this when I was in school, the hard way. Someone told me for the first time when I was 17 that 25.1 million babies were born the year I was born in India. 25.1 million, right? That's 2.51 crores. I was competing with 2.5 crore kids for everything, all the resources, the IIT seats, if I did medicine, commerce, CA, whatever, right? My school had like 80 kids in a class or 70 kids in a class and in 4 sections. The most vivid memory I have is of intense competition and scarcity. Right? Everything is scarce. There's one football and like 120 kids running around on our playground. It's WWE. It's not football. Right? It's lunch break. But we have 40 minutes of lunch break. If you go to the canteen, by the time you get in line and then by the time you get your food, 35 minutes are gone. You have 5 minutes to eat. Right? So it's a question whether you'll eat today or you'll play today. So I'm just giving you funny examples. But
correct. If you're not the best, you won't succeed.
Yeah, and I think in some way it's brutal. I don't think I wouldn't want my son to go through that, to be honest. But I also think I'd be a very different person with less ambition and a slightly ungrounded view of the world if I didn't go through that. Right? You see that today with kids who go to international school. No offense, very smart kids, obviously, but public school and international school, anywhere in the world, the kids are brought up differently. They see a different version of society. So given what I saw, I think it tuned into me. And I went to a boys' school, very competitive. Every lunch break is a war, man. It's really WWE, except it's not scripted. You're actually getting punched in the face. So it teaches you that competition is real. I think it teaches you to learn how to draw boundaries, learn how to not allow people to cross them, learn that your name means nothing, when it's one guy against you. And
Interesting, yeah.
yeah, learn that your health means also can you fight for yourself.
Yeah.
Sometimes literally.
Yeah.
So I think India for me was a place where you're taught reality. You cannot avoid it, right? And for me, my wife went through the same thing. So many of my friends, all of us went through the same thing. I'm going to make sure my son goes through that as much as possible. That's my lesson from that. Second, I think I didn't have an appreciation for our history as much when I was in school until I left India, went to Stanford. I always knew, look, for my family personally, since you asked about family, my father's father was orphaned when he was 16, 15, 16, right? No family, no parents. He ran away from home. He was a busboy in Kamath Hotel in Bombay, right? And he had to sleep under the table at night, 1 meal a day from the kitchen if he worked hard enough. To go from there to giving my father like a reasonable education, being able to pay for a CA degree. Right? And my father went on to do 3 degrees, CA, BCom, LLB. The jump that he had to make from orphan to my son will study, because I didn't study, right? He died when I was 5. I have memories of him, but I couldn't talk to him as much as I would have liked to. I think it's insane how many people my age have had that experience. The pain of the grandfather's generation, early independence and so on, how much was stolen from them.
Yeah.
Right? There was no hope. My grandmother, his wife, she was a school teacher. She had a government job. I remember her going till she was 60, right? Because she had to pay for my father's wife, my mother, because she was having her first kid. As a kid, you don't have any sense of how difficult this is. What are your parents going through? Your grandparents were thinking, how will I feed my son the next week? Your parents are thinking, my father went through that. Thankfully, put me in a position where next week's food is okay, but 3 months later is a problem.
Yeah.
Because CA pays you 150 rupees a month. It's crazy. They pay nothing. You kind of have to build an appreciation for where you come from. On my mother's side, my grandfather was in the Air Force. Again, he lost his father. He had to be an earner, join the Air Force because that's the only job around him. Fought 3 wars, lost 1.5 with China, won the one with Pakistan. When this Aman-ki-Asha nonsense comes out when I was in college, your grandfather tells you, yeah, we went to war. Okay, this is horrible. And then Times of India and some media company in Pakistan collude to start an Aman-ki-Asha campaign when I'm in college. A year after that guy comes, Kasab comes and blows up Bombay. You have to link these two things and say, okay, something absurd is going on. Without knowing your history, you don't know how much nonsense is being fed to you in an organized way, right? And therefore that resilience and that antivirus firewall in your mind, that I'll question everything that comes to me before I buy it, right? It comes from knowing history. And having been through a reality check as early and as often as I could possibly have been put through one. When it comes to making decisions that, okay, now my life has to be about something. There's an intensity that comes, there's a laser focus that comes, and it demands more from you.
Yeah.
The motivation that says, yeah, one more Netflix show, one less exam, whatever. I think the motivation that comes from that is hard to build any other way for me. Now, the negative is it never stops. I always feel like I have to repay.
There's a sense of inadequacy.
There's not inadequacy as much as I owe them. I couldn't tell my grandfather, thank you. I'm going to make sure my parents both know I'm so grateful to them. I'll make their life 20 times more comfortable. Their life was what they imagined when they were my age growing up, right? Because their opportunities were so limited.
Yeah.
My father had to bust his ass. I saw him maybe Saturday evening and Sunday the whole day. And Sunday he had to sleep because he was exhausted from the week. He spends more time with my son, his grandson, in a week than he spent with me in an entire year. He's learning how a 3-year-old kid learns how to read English. Seeing my son read.
Yeah, that is
important, right? Yeah. And I didn't know it was so important until I imagined this, and I had good advice when I went to the US. Look, someone told me, look, imagine in 10 years you'll have a kid. Imagine what your parents will feel missing you and their grandchildren. Because you're thinking, should I stay here? Should I leave? Should I go back? Is India going to be where I can realize my financial ambition at least? So a lot of things collude to give you a sense of, okay, it's a lot of choice, it's a lot of noise. I will cut down to what is important to me and I'll make it work. Work with what you have, make it happen, because before you, 50 years before you, there was nothing.
Yeah.
Right? Everything was stolen from them. So I think to explain my ambition, I think it's partly a personal motivation mostly. And second thing, I think, thankfully, if I can speak about India macro, when I was in school, college, India was sub 1.5 trillion in GDP.
Yeah.
Right. It doubled from when I was in college to today. Next 10 years, we're going to go from 4 to 8.5, 9.
Yeah.
More than double. Yeah. It's not going to double again in my lifetime. I went through one doubling, and our parents' generation saw it. They still don't believe it, by the way, but they're so much better off than they thought they would be. We are going to go through a doubling, and I hope we realize this doesn't happen very often. Right? With this doubling, we're going to be the 3rd largest economy in the planet. Very little stops us. Right? Too many people, everyone sitting on the street. At one point, there was a problem. Suddenly, people are an advantage of this country. Right?
Yeah.
Big market, consumption, whatever. So I think having realized the beneficiaries of GDP doubling are accidental and sometimes almost always have to be intentional, both, right? I want to be in the intentional category. I think venture allows me to do that because in venture,
And be a
you're
driver
forced,
of it in some way.
exactly, you're forced to think what's going to be valuable 10 years from now.
Yeah.
Right?
Yeah.
When the GDP is double, more people are buying Air Jordans, and it's starting today already, but it becomes mainstream.
Yeah.
We thought of D2C like 8 years back, and today our largest company is a D2C brand. Right?
Yeah.
But we had to think like 8 years ahead
Yeah.
when venture timeframes were like 5 years back then. The fund life was like 5+2 or 6+2 or whatever. So I think bringing a lot of this context into your way of thinking allows you to pick your job and do things the right way, be patient, not give up, maybe utilize a little bit of that personal emotion. For me, it's anger. There's no way in hell I'll tolerate this. Right?
Yeah.
So it's a little bit of that anti-authoritarianism also still. But that's a good combination of macro, personal, ambition.
Interesting. If not a venture capitalist, what would an alternate path for you be?
Good
Because the
question.
ambition drivers would have probably been the same.
Good question. I've thought about this, and I made two decisions that I worked backwards from. First year of Stanford, I decided I'm not going to stay in the US. After my first year into my first job with the startup, I decided I'm not going to be a founder. So either
Why is that so?
Well, for a simple reason, I think the story we're fed about a founder is he's a visionary. He knows how to build cool stuff, like Zuckerberg, right? For me, my generation, Zuckerberg is the guy who made it. When I landed at Stanford, the next month, Steve Jobs died.
Yeah.
But exactly a year later, Facebook $100 billion IPO. This kid, a little bit older than me, but still, I mean, this guy going IPO. This guy, and the way he's changed. It's a $1.4 trillion company now.
Yeah.
Impressive, man. Impressive. MMA, reinvented himself like multiple times. Right? I am impressed. I may not agree with some of the things he says, but I am damn impressed. Right?
Yeah.
If I was him, I'd say, I made it. I don't care what anyone
So every
thinks.
10 years has been a cycle for him. Yeah.
He is the prototype of the millennial founder for me, right? He makes it. He doesn't give up. I like that about him. And he's, of course, flawed and a lot of things that you can criticize. The movie, obviously, some of it not too dramatized. It's hard being him.
Yeah.
But for me, the story of the founder and what a founder actually does, managing the VCs, managing capital, managing all this HR stuff, managing recruitment, dealing with disloyalty, dealing with churn, customer complaints. I felt that was not what I'm good at. For me, when I came back there, I said, I have two choices. I'm not going to start a company, but I will be the best operator I can. And for me, that time, Sundar Pichai, Satya Nadella, dozens of Indians who, you heard on Stanford who came to campus, who spoke about, look, you don't have to be a founder to be a really good operator in a company, in a tech company. For me, that was one option. The other option was, and I got accidentally exposed to the gap in venture capital, which is how we started 314, the few of us who got together. The second option opened itself when I said not a founder. Right? So it comes from the neti way of thinking in Indian philosophy. Not this, therefore, what are my other options? That's what led me to what I'm doing today.
We spoke about how the growth of the Indian economy is due to happen and is already happening in several ways, right? Consumption's rising. What is the impact of this growth on consumption patterns that you are seeing today?
Yeah. So I think there's three layers to this.
Yeah.
Right. The first layer is overall macro India GDP, which is maybe a good sign of progress. I think the doubling leaves a lot of very interesting second order consequences that we have to start building for today. Very simple examples. I think the methods by which we will transact, we will communicate, if India doesn't own those channels, platforms, whatever you want to call them. For example, if take e-commerce, a lot of it is global shareholders, right? Global capital, Walmart, some of them just been outright bought over. But look at Indian banks. They've been, my defense, one of the best asset class subsectors to invest in. They've compounded like madmen. If you look at banks in India, we own all of it. All regulated here. Shareholders are all Indian, majority here. You can't complain about foreign interference or foreign ownership in Indian banks.
Right.
Indian IT companies, again, they're publicly traded, so a lot of global investors own them. But you can't argue what TCS and Infosys are not Indian companies. They're by DNA Indian. But we skipped a 10-year period where we didn't invest in the companies building the next big value creators, which I think, if I would argue, were startups. There wasn't enough Indian capital in them. Yeah. Right. And turns out all of them are globally owned now. Right. Global funds, global VCs, etc.
Right. Interesting. Okay. Wow.
So I think we have to understand with GDP doubling and then this happening, you can't afford to take your eye off the ball even 5 years. You have to consistently have policy that encourages local capital to come and build these companies. Right. And we didn't have that for 15 years. From 2005 to 2020, from 2015, 2016, digital
What's the
India
consequence of international capital in Indian startups versus Indian capital?
So it's a good thing that we're an open market. The world's investors think India is a growth opportunity. They invest here. They make great returns. Of course, they pay taxes. They take the money out. In China, you go and it's Hotel California. Sometimes you're stuck. You can't take your
Yeah.
money out, right? And it could change any day. So the different system, an open system, open marketplace, it's good. It's good for India. FDI coming in is important, right?
Yeah.
For the forex and so on. But at the same time, I've been an investor in startups. When a very large global investor is on a board, the tone of the company changes, right? He's not making decisions anymore. He's going to a global IC. He's waiting for other people to approve. There's global compliance, global legal, global this, global that. Not his fault. I mean, he is a representative of global capital, right? They're thinking about India as global. They're thinking of India as top down. They're not always educated on Indian policy. They're paying someone else to tell them what this law says, what that law says. Whereas we have to read all the laws. We're part of the industry bodies. Our way of operating is local first, right? So there's a difference in the tone on the board. It's natural. I'm not saying it's good or bad. I'm saying that's reality, right?
Right.
And therefore, you're not surprised a lot of companies make decisions in ways that are not always bottom up but top down. That's fine. I mean, that's okay. But I would say if you build companies bottom up with Indian capital, a little bit more realistically grounded, a little bit more aware that customers will not like a few things and like something else, right? A little bit more practical about goal setting, a little bit careful about capital because you have all come from a capitalist class environment.
Right.
You can't take capital for granted, right?
Right.
You hire carefully. You know that, payroll, and I can't just fire 100 people when the market turns, and I can't blame interest rates for letting go of 100 jobs.
Yeah.
There's a certain morality in the job creation.
Right.
So the Indian way of doing things is different. I think Indian capital coming in, it's this corner of the market. Global capital works a little bit differently. It's a little bit slightly different culture. Not good or bad, it's different.
Yeah.
Right? And I think the good thing is in India, both succeed, which is very important.
Yeah.
Right? In China, for example, not to slam their system, it's their system, it's their country. They decide, here are the rules, you play, you get to invest, you don't play, don't come.
Right.
Firewall. Right? So I think that's a difference here. But coming back to the original point, I think the macro, therefore, the essentiality of building these companies, these channels, these platforms, etc.
Right.
I think that's a massive opportunity. If the country wasn't growing this fast, right, or this doubling wasn't very imminent, I don't think the aggressiveness that the aggression that you need to build these companies in 10 years, 15 years, the venture aggression, I don't think India would have been able to support that at full.
Correct. Yeah. 100%.
That's one.
Yeah.
Number two is the corporate India. Now, corporate India is a fairly new phenomenon. Most people understand that corporate India in this modern avatar is only 30 years old. Right? 91 is when you could start building companies that competed with the government. Until 91, the country I was born into, government ran telephones, government ran real estate, government ran post office, government ran everything.
Right.
Right? Government ran TV, like you had Doordarshan 1 and 2.
Yeah.
Right? The Batman at 5 p.m. on Sundays, the only cartoon you'll get to see.
Yeah.
Right? I think that was a fairly, I would say, unfortunate experience for India. Right? We didn't allow
that it took so long.
Yeah, we didn't allow for a second way of thinking to compete and build a true marketplace.
Yeah.
So I think once the marketplace opened up, Pepsi comes in, Coke comes in, all these apparel brands come in. You get to see suddenly that the Indian consumer respects choice. Suddenly the consumer having more choice means companies compete for their wallet share.
Yeah.
Right? A fundamental essentiality of what a human society is suddenly available for corporate India. Right? So you're not surprised to see from two-wheelers to all of auto, telecom, banking, financial services, and even B2B like IT, for example. We are building massive companies once 91 starts, right? So we didn't need the world to come coach us. It was always there. The latent ability was always there. We had to be given permission, unfortunately.
Yeah.
Right. So I think once you remove that part of history from the last 30 years, and I'll give you March 2024 data. March 2024, the Union Government of India collected 11.4 lakh crores of corporate taxes. Okay, that's 11.4 trillion rupees.
Yeah.
The tax rate is 25%.
Right.
So into 45 lakh crores of pre-tax income in corporate India, public and private. 45 lakh crores is $500 billion. $500 billion is 1/8 of India's GDP.
Yeah.
13% of India's GDP is India's corporate pre-tax profits. That is insane to me. You're not surprised, therefore, that suddenly all stock prices are up.
Yeah.
Suddenly, none of them need debt. They're all paying back their debt. They don't need bank debt. There's a big capex cycle because they're all so intensely profitable.
Yeah.
Indian companies are massive value accretors when given 30 years to just build a great business.
And how do you differentiate between corporate India versus startup India from this lens?
I'll come to it. Remember 30 years. Okay, Havells, Reliance, Adani, Vedanta, Bajaj. pick any of the big Tata even, right?
Yeah.
A lot of them were around pre-1991.
Yeah.
But they really got into gear when the marketplace came into being.
Yeah.
Right? So I think you have to understand that in India, from where we've come, in 1991, GDP was like $275 billion. Okay, today it's almost 4 trillion.
Yeah.
Compound at some 8.2%. It was very scary building a large, or even imagining a large company when the country's GDP is $200 billion. Right? Fast forward to today, 4 trillion, number 5 in the world, you'll be number 3. Suddenly, thinking about $1 billion outcome is, unicorn, of course, there are hundreds of them. You have to also appreciate the guys who started these big companies who are now large corporations, right? They were doing it in a different scarcity environment. For them, growing profits and investing the profit back for next year's growth was the only way to do it. Murthy, for example, at Infosys is famous of never raising equity capital till he went to the IPO.
Yeah.
And he was embarrassed to even go to the bank for debt, like a 5 lakh loan to open a new office, right? A famous story. But today, if you don't get a C check, founders saying, forget it, I'll try another idea. Right? Capital has become this transactional thing. If I don't get capital, okay, I'll try something else that gets funded.
Yeah.
Right? This building with profits or internal accruals, it's not even a concept most people want to think about.
Yeah.
Right? Of course, there are still Zerodha and Zoho, the bootstrap warriors who've made it big, and that's why they deserve respect. But that's quite natural. That was a default way of doing things in India. Right? So in view of corporate tax profits and the intense profitability of corporate India,
right?
I think therefore, in India, our startups have a unique advantage. This country allows you to build large outcomes profitably, but it takes 20, 25 years.
And that story is not as spoken about as it should be.
It's not spoken about because it's inconvenient, right? Who wants to wait 25 years to be a billionaire?
Yeah.
If you can do it in 10. All our VC funds are 10-year funds,
Yeah.
right? I can't ask my investors to say, give me 25 years to return like a 5x fund, right?
Yeah.
I have 10 years to return a 5x fund.
Yeah.
So everyone is, the whole startup ecosystem is working in a decadal cycle, right? Nothing wrong with it because it's worked very well in the US. It's worked very well in China, but they've created trillion-dollar companies. We don't have a trillion-dollar company yet.
Yeah.
But you have to respect the fact that we can do both in India. Right? We can clear the Flipkarts and the Darwin boxes and whatever, right? We've done a few of those. And you can build Infosys, HDFC, and so on over 30 years. So for me, the positive takeaway is if I build a SaaS company like Darwinbox as as a seed investor or an angel investor, in 10 years, it's worth $2 billion, $200 million of revenue, profitable, fantastic. But if I project 30 years, it should be SAP, it should be Workday, it should be Salesforce.
Yeah.
Right? We can have that ambition that we can continue growing profitably. So I think that's corporate India, and that's why there's a lot of hope here. And then you come to consumption, right? Because consumption is the basis of all of this.
Yeah.
And then in consumption, I think some scarily large shifts have happened in the last 5 years. For one, everyone used to preach to India that you have too many people, they'll never make enough money, jobless growth, all these myths about you are a poor country, you'll remain poor, your people are foolish, you don't know how to work. That was a default monotone when I was in school. We used to have these very, I'll give you an example. We used to have these very weird Nirodh campaigns.
Yeah.
They won't tell you what they were talking about. You're a 10-year-old kid, okay?
Yeah.
Like, and they're passing out pamphlets in school to the 10th standard kids. You don't know what they're talking about, but they're literally trying to program you that it's wrong to have kids. Okay? It wasn't like be safe.
Yeah.
Like, no, it's not be safe and whatever, right?
Yeah.
Don't get
I remember that, yeah.
Yeah, but don't have kids. I mean, it's insane, right?
Yeah.
I'm not surprised so many of the guys my age, men and women, not getting married. And we have a significant population decline coming. So it's already started in Korea, Japan, etc. But it'll start here another 10, 15 years. So I think you have to understand that having more people who have ambitions to spend, who are thinking beyond their needs, they want things now, right?
Yeah.
It's no longer, I want a canvas shoe for 800 rupees. I want an Air Jordan for 3,000 rupees. Why can't I buy one, right?
Yeah.
I'm not happy with these Micro Max phones. I want the iPhone. Now, we start having moral judgments of this, that, he's making only 40,000 a month.
Yeah.
Why should he buy an 80,000 phone,
right?
But man, that's his life. It's his decision, right? In the US, it's not like any other country is so morally disciplined about their money. Some people want things. They should be okay to...
Oh, they're absolutely abysmal about their
money. It's an individual's choice, right? What he does with his money after he pays taxes, no one else's business. So we still have this weird, I would say, contradiction between this morality about money, and sometimes too much money is a bad thing. Sometimes building a skyscraper for your home is a bad thing. Too large a wedding is a bad thing. But then there are startups and all these founders who are building wedding tech and this tech and dating tech and that tech. So in India, you see a very interesting dynamic of contradiction. And if you're more neutral about the opportunity, you say, look, people are going to spend money on these things. I shouldn't judge them, right? They're going to eat more meat. They're going to drink more alcohol. They're going to travel more for vacations. They're going to want to work from home or work remotely. They're going to want to have a slightly more creative job than the 9 to 5. They're going to need more health insurance because they're consuming a little bit more, they're putting on more weight, whatever. So there are second, third, fourth order derivatives of a consumption-led economy becoming more prosperous.
Interesting, yeah.
That companies can build solutions, products, and of course, make great returns from.
Yeah.
Right? And I think if we just remove the morality that keeps clouding us, right? And trying to judge people always for what they buy and how they spend their money.
Yeah.
Remove that for a moment. It's great they're spending money. That's 60% of our GDP's contribution today.
Yeah.
Right? And that's an opportunity for all of us. And I think, therefore, Mama's IPO is the start of a lot of good things to come. I think more D2C brands.
100%, yeah.
Delicious, Moko Bora, a lot of other things that in every vertical you'll see billion-dollar companies. And they should be. Why not? And here's the last thing I would say. If you look at Unilever, which is a European company, massive, global, they came to India long back, obviously wired policy in their favor. I don't blame them. Anyone coming in would have done that. Their operating income today is 33% of their gross revenue. Okay. For an FMCG company to have 33% operating revenue, this is pre-marketing, and then that's why they spend 10% of so many billions on marketing, right? They sponsor everything. That is insane. That means we're paying too much for the essentials in FMCG.
Which also means that there is space for more and more
space for more competition,
yeah.
Space for better brands, space for more efficient brands that market direct to consumer, get them delivered in interesting ways, bring efficiency, right? You don't have to sponsor IPLs and do all these silly hoardings and put up Times of India ads. You can reach customers differently, right? And still make great returns, right? So I think you look at all of these corporate balance sheets, every company, whether it's global or Indian, right? And you say as a startup, that's your margin is my opportunity. Amazon was a prototype of doing this well.
Yeah.
Right. So I think that's also now a fourth consequence of all these things happening. So next 10 to 15 years, I think a lot of things to do, a lot of things to build. It's a window that doesn't come back.
And probably add to it the ambition that's innately seeded in the Indian mindset.
For sure.
Like you, right?
For sure.
To grab the opportunity to jump onto this wagon.
For sure.
And be able to create something meaningful and become wealthy.
That's right.
Right.
That's right.
We've seen success stories, yeah?
The whole loop.
Yeah.
Right. I disagree with the theory that we can do great things without having a personal ambition
100%.
for the golden pot at the end of the rainbow.
Yeah.
Right? Because human motivations are fairly well studied and understood.
Yeah.
Right? There's a certain soul to ambition that is required to make a person bear through 10 years of an unbelievably difficult grind. But that motivation, that it's worth it because of that. Right? That is essential. And in India, I think one of our big risks, I'm sure you'll ask me about risk. Our big risk is we still have the vestiges of the old system. It's very Marxist in its thinking that you are not allowed to have more than this. There's some artificial limit, a ceiling, where, if you cross this, you spend this much, you say this thing, you own these other things, your children become like this, then it's a problem.
Yeah.
And the media is full of this.
Yeah.
Right? I think that is very dangerous. And I'm not surprised, therefore, when founders make it, they want to talk less and less. Right? I'm not surprised. The best VCs never come on, and I'm very honest about it. They'll never come and talk to the media.
Correct.
Right? Most VCs will only talk to the media once in 3 years when they launch a new fund because they're required to by policy. Otherwise, they don't want to come. Because success has this very weird gravity of things you don't want to deal with. Right? Yeah. It's not just true in India. It's true in Eastern Europe. It's true in Africa. In Africa, it's worse.
Yeah.
Right? Because there's more people further behind. So I think that we have to, as a people, I think millennials are going to be the generation that sets a tone that I don't care for someone's success. I'm more worried about mine.
Yeah.
Right? The envy, the blinders to envy. I think I'm seeing that more in millennials.
Yeah.
Right? What will uncle say? What will auntie say? I don't care. Similarly, what is uncle making? What is auntie making? I don't care.
Correct. Yeah.
Right?
Both ways. Yeah.
I want this. I work this hard. I deserve to be paid this much. If my boss treats me badly, I get a better job. There's a certain belief in your individuality that is required for society to say how much he's making, who cares? Pay your taxes, don't be a criminal, right? Don't build your balcony above my land because that's illegal. Yeah, don't encroach, right? There's boundaries.
Yeah.
But if you're on your own property, you're doing what you want, cool.
Yeah.
Right? I think that's the millennial attitude. I think it's healthy. It has its problems, but it's healthy. I think next 10 to 15 years, I hope, I'm praying, that people are not made a victim of their success. And I think that's why Shark Tank is important. It makes people see success in real time. Getting a funding from all those entrepreneurs, it's a little bit adversarial,
But I don't
whatever.
think this is an India context.
It's a human context.
It's a human context.
I agree.
Yeah.
I'm not saying it's Indian. Like I said, it happens everywhere. Africa. It's all emerging economies. This constant paranoia of being left behind. Yeah, take engineering for example.
Yeah.
Every university brags about Google coming and giving one kid an 80 lakh job.
Right.
The pressure on the 1,000 other kids in that college, that batch, it's insane. They're all made to feel mediocre because they didn't get that job. Right?
Why is it that you think a burst of capital or becoming wealthy is always looked down upon? And whether it is the West, say the Zuckerbergs and so on, are the ones who are usually under the radar, as opposed to, say, someone like a Charlie Munger?
I think this is something I learned across multiple societies. First of all, the opportunity for success isn't the same in every country. Just in India, the opportunity for success in 2024 is very different from, say, 2007 when I was graduating 12th standard. It was impossible to dream of being a founder back then. But in 2024, even school kids know what a founder is. And then all of them are hacking around trying to build AI apps now, right? So even one country can change, right, in a decade or a little bit more. And I think I saw the difference in the US and India. I also saw it turning in the US, right? Normally, when Amazon, Steve Jobs, when they went IPO in the 90s, it was a dot-com mania. It was a bubble. There weren't too many criticisms of them, saying, oh, they're getting too rich, they're getting too big, they get the stock price too high. They made it. They were on the Wired magazine, Forbes magazine. They were everywhere, right? But today, even if you make it to Forbes magazine, the guy who's writing a story about you, but he spends his money like there's always a criticism.
Yeah.
Right? No one criticized Jobs when he became a billionaire.
Likewise in India.
Right? So what I'm trying to say is this is not a India phenomenon. This is a human phenomenon. Yeah. And I think it comes from, again, this very Marxist origination that somehow it's a zero-sum game. Somehow him succeeding means I am somehow being stolen from. It's not.
It's not, yeah.
It's never is, right?
Yeah.
If you think about it hard enough, we made up money. It doesn't exist. Powell decides to print more money, it's caused inflation. Gold is scarce, there's only this much around. Physical realities are different, but money is made up. And there's a fundamental elasticity to that we don't understand because we're not taught about how money works. Right?
Yeah.
So if you release yourself from this bias that I have to worry about what other people are making, or my first job matters, the Google job, if I don't get when I'm in year 4 in engineering in Bangalore, then I'm a failure. Right?
Interesting, yeah.
I think you suddenly get a little bit less pressure and you also get more clarity that, yeah, my life, I have many branches that are going to come in front of me. I should prepare for that.
Yeah.
Versus if I didn't make it now, I'm done. I should somehow feel sorry for myself. So I think there's a lot more things I can say, but it's definitely not an Indian phenomenon. I agree.
Are there any sectors that come to your mind that you think, and this could be 2 or 3 of these sectors, that you think are going to absolutely take off in the next 5 years?
I think when I started out 314, Fund 1, 4 or 5 of us who were around that time, there was almost a Bible of what you could invest in, right? You can't do this, you can't do that, nothing CapEx related, you can't start a manufacturing tech company. Real estate is like this weird thing that you should not do. And so the universe of possibilities was very, unfortunately, strictly defined.
Yeah.
Right? I think venture, if you think about it, is supposed to help 2 guys on a laptop figure out something new.
Amazing, yeah.
Right?
Yeah.
When Licious came to us, for example, they were literally 2 guys on a laptop trying to build a meat brand in India, the first of its kind. No VC said yes to them, except us. It's crazy, right? Today it's worth $1 billion, 1.4. No,
interesting. Can you go deeper on that a little?
So the problem here was we had become this very monoculture way of thinking about what type of companies are okay to fund if you're a VC, right?
Yeah.
Very dangerous for India.
Right.
The US are doing everything from quantum computing to putting satellites in space.
Right.
And even if Facebook's big, there are like 20 other things getting funded still.
Right.
But in India, if you try to build something social networking, Facebook's already done it. And 20 American companies.
How are you going to compete against them? Yeah.
So you're not even allowed to say, okay, you know what? Let's talk about what that could look like.
Right.
But we're not doing it.
Right.
It's like dismiss in 3 minutes. Right. So I think to think about venture as the experimentation of the formation of ideas that will be valuable in 10 years.
Right.
We try to like beat ourselves to the point where that is the default way we think. Right. Don't listen to the McKinsey report and all this stuff. Right. Ask fundamental questions. What do people need today to be solved? Meat, there's a fundamental problem in how people buy meat, right? Which is a delicious story,
yeah.
Famous story now. Darwin Box, there's a fundamental problem. HR software sucks. There needs to be a better platform that's built for the modern workforce.
Right.
It can't be Oracle and SAP, for God's sake.
Yeah.
So all our big outcomes are us beating ourselves into saying, ask a more fundamental question, right? Which the founder already is, by the way, because he's not an idiot. He's coming from a very important realization, right? But meet him there, and see if it's true. And I think challenging yourself to say, see if it's true, right? Instead of, oh, the report says it's not true, so why should I bother?
Yeah.
Right? That is where the discomfort that is essential to being a good VC is born from. And that brings you a discipline that I am missing things in India, right? There was the lexicon D2C didn't exist in 2015. Backlicious. Today, everyone is D2C this and D2C that. Right? Even Unilever is doing D2C.
Yeah.
That was something that I think, as an example, it is scary. There is an element of fear. There is wide uncertainty, right? But that's what venture is supposed to do. That's why it's called a risk asset class, right? That's number one. I think, therefore, if you zoom out to today, the companies that are going to be valuable in 10 years are a few prototypes, a few common principles, if you will. Number one, I think we're going to have to make more of our own things, right? For a long time, Indian startups were said, be asset light, be horizontal, marketplace, not full stack, right? So all the B2B marketplaces also, there were dozens of them at one point, maybe 4 or 5 have survived. And we just don't want to talk about B2B marketplace anymore because everyone made a mistake. E-commerce marketplace, at one point before 2016, 2017, when the crash happened, there were like 80 of them, I think.
Yeah.
40 in fashion, 20 in food. There's 1 or 2 left in all of them,
yeah.
The ones who raise enough capital, right? But now, D2C, full stack, making your own clothes, making your own shoes, making your own luggage bags. For
verticalizing.
Sake, right? Verticalizing. And what are they doing? They're just making their own stuff.
Yeah.
Right? They have the slightly more evolved sense of, my margins are better when I control the entire supply chain, which is what Licious does.
Yeah.
Right? It goes straight to the farm. One day it'll own the farms.
Yeah.
Right? Already close. So I think that's the inevitable path for startups in India. Make your own stuff. So I think full stack, where startups manufacture their own products, I think that's where we'll see massive opportunities. And I think that's where you start competing with the Unilevers, right? Because the Unilevers, the trend is more contract manufacturing. They don't want to own their own manufacturing. And whole industry of contract manufacturing is blossoming in India because large brands are shoring, not offshoring, but sending their manufacturing out. I think D2C companies that take control of their standards, impose a certain verticalization, thankfully are getting funded to do that now, like companies like Licious. I think they can build their own supply chains. And a lot of the moats that we envy in the Coca-Cola, the Pepsi, the Unilever, you start seeing Indian companies have that in a very Indian way.
So you think vertical integration is a definitive moat, not only from a scale or market dominance standpoint, but also profitability?
I think for all of it, because it improves margins, it improves reliability and product quality.
Yeah.
It brings a certain rigidity to the valuation. Yeah. The thing is, has these assets, it's making this much, it has equipment.
Yeah.
And especially because I think the most important thing for us as VCs is these companies have to go IPO.
Yeah.
Right? If they're asset light and there's nothing on the balance sheet, is vaporware from a public markets investor's perspective, they'll ask you, how can you be a meat company without a manufacturing plant? Right? How can you not own the plant that these things are being processed in?
Yeah.
I think these are very hard questions to answer. My VCs believe that I have to be asset light. The public guy is like, I value companies on their assets, right, and their cash flows, both. You're missing an entire half. Right?
Yeah.
So I think going full stack is really important. I think, secondly, we haven't really built too many Indian SaaS companies, if you think about it, right?
We haven't.
The Infosys IPO, first Indian company to go on the NASDAQ, it was a national event, right? All of business media, business news, like everyone in that generation still looks up to those guys because they broke this glass ceiling.
Yeah.
Right?
So Indian SaaS for India or Indian SaaS for the world?
To that. So Freshworks went IPO, but in the US, and they crashed 80%.
Yeah.
Right? The US is a very brutal market for a small company, especially not a local one. I hope the Zohos, Zerodhas, all these guys who built differently here, very Indian DNA. When they go public here, right? Mama's a great example. They celebrated. They're on news every week. The anchors love them. They called for all kinds of opinions. Going public here is really important. And I think Indian SaaS companies, whether their customers are Indian or global, that doesn't matter. But building for the Indian IPO, like Infosys and then ADR out, whatever, that's fine. Adding value to the Indian index here, because we have very little SaaS in the Indian index. Right? I hope the Wattfix, the Darwinbox, all these guys will start a trend. So I think that's going to be a big trend in the future. And I don't think these are going to have to be $500 million in revenue and $300 million in revenue. They can be 500 crores in revenue, right? But 70% gross margins, the market will welcome them. SaaS is one of those very interesting business models, which is why every US VC salivates for it. But the margins are so high that it means no incremental cost for every additional dollar of revenue. Right? That's the theory at least. But SaaS companies spend so much on channel, on marketing, on brand. I think if you bring a slightly more Indian rigor to it, right, which the IT companies have done for 30 years, you can build really efficient companies that go IPO.
Yeah.
Right, and you don't want to wait for these, absurdly high valuations.
Yeah.
So I think the software business model, right, with 70% gross margins, I think that's going to be a really big theme. And I'm already seeing Indian corporate, like India Inc., becoming a reasonably important customer. In one of our biggest SaaS companies, Darwinbox, 60% of their customers are Indian. So I think these were contracts that no Indian founder would have said is even up for grabs. Like, how can you displace Oracle inside Kotak Bank?
Yeah.
Right, but these guys have done it.
Yeah.
Right, for HR of all things. So I think slowly startups are asking, what about some other vertical? What about marketing? What about sales automation? What about accounting? Right? Everyone's been stuck with Tally for 30 years. So I think you're going to see a lot more of these what about this question being asked in software. And the Indian customer is not going to shy away from buying Indian products.
Yeah.
And corporate India's profits, like we spoke about.
They understand India much better than global products too.
And they trust you more, man. When some guy from Oracle, Singapore comes and says, I'm going to charge you this much, but next year it goes up by 30%. All the hidden charges. And this is a real problem with Oracle and SAP and a lot of these guys. You can't do anything. There's who do I call?
Yeah.
Right? It's a real problem for India's banks, for example. Who do I call? My systems are not working. Right? Whereas it's an Indian company, I'll call the founder. Like, I know him. He has a bank account with my bank.
Yeah.
Right? I have a relationship with this guy.
Yeah.
So I think that matters. And I think it's going to matter more now because large Indian corporations, they're more profitable.
Yeah.
They are investing heavily in technology.
Yeah.
I think the third big trend is going to be something that we can't quite fit into one mold yet, but we're trying to at 314. We think the intersection of entertainment and spending is going to mean it's not blockchain, it's not creator economy, it's not Web3. We are going to see this very interesting phenomenon where it's not gambling, it's not gaming, but people are going to not just vote with their attention, but with their wallets. I think you're going to see this iteration of distrust in media. You're going to see more people our age coming online and becoming massive in their followings. And they're going to see them not trusting the YouTubes or the Patreons or the app stores. They're going to start thinking of, I'm not paying 30% as rent. And what does that mean when this whole wave of creator economy and the following and so on is huge and you're not making enough money yet? And therefore 30% is even more of a problem.
Yeah.
What happens when AI comes and says, you don't need human beings to create anymore? Creation goes away as a friction point. What we're struggling with at 314 is the limitation here is not on AI or compute or algorithms or all of these other things. It's on human time, attention span. That's the only real constraint. That's a zero sum. I can only talk to you now. I can't be on another podcast right now. So we don't know what an agent-led version of the consumer side of the equation looks like. If you're able to build that today, and no, the US VCs have different theses. Expertise will be free. Everyone will have a personal tutor. There's a constant live expertise running around you as an individual.
Yeah.
Right. I think it's a very nice utopian version. But in India, we have real problems we need help with from software. There's a lot of things that from education to shopping to banking to shopping for insurance, like everything is going to need help. The human being is going to need help. So we're trying to figure this out. And I think in India, we're going to have a unique problem where it is a massive consumer market, but the per ticket is very small still next 10 years. How do you make money underneath that? So I think a new channel, right? It's B2C, but it's C2B also, a two-way channel. I think that is something that we're building a thesis in. I think in India, we can experiment in new ways. I think both sides pay for it, which is the interesting thing.
And this is at the intersection of something like a community.
It's not community. It's something more. It's a new channel. So I can't give away too much because there's some companies actually trying to think this through. But we think AI will play a small role in this, but it will be us getting out of this asynchronous way of communicating, making it more programmatically synchronous. So making my time split up into multiple channels at once. Making my attention something that something else can represent for me. And I think that is a fairly interesting paradigm that we can do in India because the per ticket is small. And companies are going to need this to be able to make money under the ticket sizes we have today.
As a midway segment, I want to do like a rapid fire on your views on venture capital in India.
Yeah,
right?
Of course.
What is the one misconception that you feel exists about venture capital in India?
I think the venture capital business model globally today is very American.
Right.
right? It was born in the 80s. And I think Sequoia is a firm I respect so much, Sequoia US, because they were the pioneers of this model. For 30 years, they've built $1 trillion, multiple $1 trillion of internet market cap. They built the internet. And I think that's what the power of venture capital done right.
Right.
You can bring an entire S-curve of technology,
Right.
and then mini S-curves and everything that comes out second and third order. And you can build a legacy that spans multiple decades. But I think in India, there aren't too many VC firms or LPs, both sides of the capital, were allowed to think in decades. When I left college looking at venture capital as a business in India, the term for a VC fund was 5+1. It means you had to return money in 6 years. Today, in like 6 years, companies aren't even able to get past 10 million in revenue. You can't have fund returners.
Yeah.
The best case is a 10 million revenue company, right? So I think the reason we weren't giving time to VCs is because the LPs didn't trust them to manage money for that long. And why didn't they trust them? Because the American model of 220 was causing all kinds of principal agent problems. I'll distill this down to explain a few things that should make sense to anyone, even if they don't know venture capital. If I come to you as a VC and say, sir, you give me 100 rupees.
Yeah.
In 10 years, I'll give you 400 rupees. First of all, you have to worry, will this guy be around in 10 years? Secondly, can you trust me with your money for 10 years? Right? So all kind of questions on the term. Say, okay, we get past that and you're okay with 10 years. 100 becoming 400, 4x in 10 years, right? Is useful. It's good, decent. It's around 18, 20% IRR. But the Indian public markets today, if you just bought small cap last 5 years, it's gone up insane, like 400%, right? You're getting that in 3 or 4 years. So in India, the beta you're competing with is really high today. So in 10 years, as an LP, you're wondering, okay, you know what, actually, I can just buy these mutual funds or the sector funds and I can actually make more money. Or I can make the same money in shorter time.
Yeah.
Right? And there's some risk, obviously, holding anything for too long. The 10-year thing is very American. And it genuinely takes more than 10 years to build a company to go IPO. You can't push certain things. And therefore, the 10-year term is now, thankfully, becoming something we can do in India. But 10 years was a fight. It took 15 years. Okay, that's something you need to know. So I'm glossing past it, but it took a long time. That's what I'm trying to explain. So say you give me 100 rupees, 400 rupees is the promise in 10 years. Now, what are my commercials? I will say I'm this consultant, I'm that guy, MBA from Harvard, whatever, right? A lot of them will say that, and their decks are very team-focused, a VC deck. So you're paying me 220. What does that mean? Out of the 100 rupees, you're paying me 2 rupees every year for 10 years.
Yeah.
So 20 rupees is gone just paying for my first-class tickets and my Oberoi first-class suite when I travel and whatever, which is a big problem if you think about capital compounding. Because you gave me 100 to give you 400. But if I eat 20, I'm investing only 80. Divide 400 by 80, I actually have to give you 5x.
Yeah.
Right?
Yeah.
Now, 5x suddenly from 4 to 5x, it becomes a problem. That means I need bigger outcomes. That means I need my companies to grow faster. That means they have to spend more money to grow faster. That means I need to get them more money after me to grow faster. That means I need to make sure I'm not taking these, licious type risks. I'm investing in things that other people will invest in because everyone has consensus.
Interesting. Yeah.
Therefore, I need to know other people in other VCs. All of us are now consultants. Okay, I guess we're actually going to craft the culture narrative of this whole industry. MBB, all of us come from the same colleges. All of us are from the same consulting companies. But there's a monoculture that's built up in Indian venture capital because of this fundamental problem. Right? Where it's really, really difficult to compound money that aggressive.
And you still not calculated the 20% return.
I'm coming to that, right?
Yeah.
So right at the level 3, we're running into our first big challenge.
Yeah.
Now, fourth problem is if it actually works, right? The whole reason why you pay 20% of the profits to carry as an investor to the VC is it was hard to get that much profit in the first place.
Yeah.
So if you make it, it's worth it. Of course, you should take a piece of it, right? You made me money, you should take money as well. But you get 2 and you take 20. Where's your given this? You have a great life for 10 years, and if it works out, you get more money. If it didn't work out, are you giving the 20 back? No. So either way, you have a great life for 10 years, right? And this is where the fundamental problem came in India. Most Indian LPs, big institutions, pensions, banks, whoever, right, family offices, they looked at these guys and said, you're not worth 2% a year. Right?
But isn't the AIF policy going to govern skin in the game?
No. So, so there's a minimum contribution you have to make, and all that is fine, right? That's okay. You need money to start a VC firm. Let's be very honest. It is very difficult. But the 220 is not gone away yet.
Yeah.
In fact, I must tell you, and globally it's become 2.525, right, for the big global firms. So it's only going up, not down.
Yeah.
Now, look at the largest asset managers in the game, the fund managers, if you will, not asset, fund managers, hedge funds, right? They don't work on 220, by the way.
Yeah.
Right? All of them are required to put in a necessary contribution every year.
Yeah.
And they are paid from Jan to December. So you have to be able to liquidate and give the LPs the money back. 10 years is very difficult negotiating in a hedge fund. Hedge fund has more options. He can buy currency, he can do that, he can swap, he can change his mind in an hour and reverse his position.
Yeah.
So the hedge fund is the ultimate flexibility of chasing IRR. Right? But VC, you have to hold for 10 years, hope and pray you made the right decisions, hope and pray the founders don't fight, hope and pray divorce doesn't take away half the company. There are so many things that you worry about over a 10-year period. There's going to be a recession, there's going to be a war, there's going to be now maybe a pandemic every 10 years. There are so many things that go wrong in 10 years. If you still make it, yes, the 20%, there's logic there. The 2% is why a lot of people have a fundamental problem with venture capital in the LP side, right? But it's still a large industry. It's still trillions of dollars in assets. It still created massive outcomes, right?
Yeah.
And invariably, tech has become more and more important today. And therefore, the guys who are investing in tech, the people who can fight their way of doing things are fewer and fewer every year.
Yeah.
Right? So this thing avalanches because it worked.
Is there a quality that you think VC must have today that's more need of the hour than it was before?
I can't generalize because there are so many different types of investors. I think in Indian VC at least, I put this as politically correct as possible. When I started, and I mentioned this briefly, the consensus of what is a VC fundable company was very narrowly defined. I don't think the breadth has gone larger. I think the window just keeps moving.
Yeah.
Right? No one is made to apologize for mistakes they made 5 years back. For example, we have done 0 B2B marketplace companies. We never understood how these margins you build a company that goes IPO.
Yeah.
Especially B2B. It was already difficult for us to believe e-commerce margins will build big companies. The ones that survive raise great capital, right? The margin profile in India never made sense to us. But we felt like idiots because we missed like 8 companies. We had spoken to all of them.
Yeah.
We had deal flow. But we said no to all of them or whatever. We didn't participate. And they all became unicorns or whatever. They were on paper massive companies, right? Fast forward 5 years after we went through that, we felt like fools. They all had to pivot. The few that have made it have had to go full stack. They're manufacturing things. They're buying manufacturing plants now. They're buying land. Suddenly, capex, asset heavy. And they're doing this after they've raised 300 million, 200 million, 400 million. So they raise money asset light, but now they're investing the capital in asset heavy. Who's accountable for that, for the mistake in the initial conception?
Yeah.
Right? Capital became your moat. Nothing wrong with this, by the way.
Yeah.
I want those companies to succeed. I want in general Indian startups to succeed.
Yeah.
But when the thesis is forced to have a reality check, and the thesis was incomplete, who's accountable for not doing the work to check on that? So I think there's a lack of a feedback loop in asking everyone in that thesis, who's accountable for if this is wrong? You're taking that risk because you can't always measure everything and say it's going to be right today in theory.
And the herd mentality generally on investment or sentiment
That's right.
ends up creating a micro trend.
That's right.
Yeah.
And by the way, you go and ask the customers of all these startups, right? The cement companies, the steel companies, whoever, in every sector, the apparel companies, the silk companies. They all tell you, hey, we love these startups, man. They take 60-day credit periods, 90-day credit periods. They don't ask us for money. They want the invoice, right? They book the paper revenue. So I think there are some things like the reality check when we do it, and every investor does this. But we're not comfortable when it's so far from reality, we don't invest.
So with all the risks that you've taken that have worked and haven't worked, is there a pattern that emerges on what is it that you over-indexed on, good and bad, that others overlooked?
I don't think we are smarter than everyone else. It's not a us versus them argument.
It's not.
The IQ is not a problem.
Yeah.
Everyone is super sharp. 25 million kids, they all competed and won.
Yeah.
Okay. I think we ask too many questions in the early stage because we're still building a firm. We have to be careful. Our reputation, risk management, policy, market check. Don't get this wrong. Sometimes we have over-intellectualized our own decisions. I'm not criticizing just 314 or me, any investor, right? Even if you're buying Page or Adani stocks today, you will ask all kind of questions. Our criticism as a growing firm, emerging fund manager, whatever you call us, is we have been so strict about it makes sense today.
Yeah.
But we also build great companies that don't make sense today. I have struggled to find a consistent logic here. And that's why I say venture capital, if you tell them they have to be more accountable, they have to ask questions. How
How do you do that?
So I come back on the original point I made. it's really difficult to explain some of these risks. And it's foolish to assume the business model you invest in now is going to be a pristine version, but at a bigger scale when it goes IPO. It's going to mutate incredibly.
So
you learn things along
is
the
it
way.
more intuitive?
It's not also intuitive because a lot of people, the Midas Touch Award, for example, is such a silly example because these guys are not just going on gut instinct, right? They've built a certain pattern for themselves, which they will never share. They will never blog about it. They'll never come on a podcast and say the real. They'll never give it to you, right?
Yeah.
Because they built it the hard way. A lot of it is to do with how they deal with their ICs, how they make a founder listen to them, how they impose a certain decision on a board, and how they deal with the IPO at scale. As I said, they come up with simple patterns like it's a trend. I saw this guy. I like this Uber fellow. I like that fellow. They'll make it something that's, like sounds like an accident, right? It's a convenient explanation. The real explanation is it is so personalized, the pattern that you build as an individual in this way of investing, that it's hard to scale. And therefore, I come back to the original point I made. 220 exists because it's impossible to scale it. You cannot replicate what worked for that firm in your firm. And when you build something that works, it's impossible for someone else to copy. They can steal our people. They can steal.
And that's the moat.
And it's a weird moat to explain because if a company says I have this weird moat that I can't explain, and that's why you should buy my stock, no one's going to buy the stock, right? The moat has to be something you can write on paper and give in your red herring prospectus. I can't write a red herring for a VC firm. So I struggle with this every day. I know I have something that works. There are 5 of us who do investments in 314. All of us have companies that have worked. All of us have a different thing that works. We have to respect each other for the differences. Right? And we have to have the maturity to say, I disagree, but it's his decision. It's his deal. Cool. Okay. We all have to make sure that we have some boundary to make risks, take risks and make mistakes. We have to be careful not to follow the herd and drink the Kool-Aid.
How do you place founder versus product versus market?
It's a very interconnected graph. So VCs use this word founder market fit. Right. Before we go to founder market fit, we say us and market fit. We have a bunch of markets we will never touch.
So for you, market comes first.
For us, market comes first.
Interesting.
Because you can be the smartest guy, third-time founder, whatever. But if you're building a dead market, nothing is going to save you.
Lovely,
Right. Reality is very hard to change.
And
that's why market is important.
So
for us,
tailwinds largely.
Not tailwinds. There were no tailwinds in meat. There were zero tailwinds in HR software when Davenbox was building.
No, not directly. I mean, second order, third order tailwinds will exist. Latent demand will exist.
I think I explained it as gravity, not a tailwind. Gravity. Right?
Fair,
There is a fundamental problem with how people buy meat in India. And this still is. This is not going to solve it for everyone. So you start understanding power centers of gravity on the need space. So that's the market. Then you understand the right kind of people to build a company. This is a solution space. And the product is where need and solution meet. Right? What we call founder product market fitting. So, for example, Licious is a really good product, safe, hygienic, but it's expensive. So, how do you convince people to pay 20% more for chicken? Right? That means you need a different kind of person. You need some audacity in how they will hire people. You will need them to be very brave when people criticize them for doing something that's considered taboo, black packet, whatever. Right? At the same time, you need to be a little bit of a slightly weird investor to say, I'm going to take, oh God, I have to do this. Because then people will go to the cap table and say, on Twitter, they'll abuse me for funding a chicken company, which has happened all the time. When you see the opportunity and it's so big, you say the risk is worth it. Right? There are some markets where we know it's as big an opportunity, we don't want to take that risk. Right? So this becomes where market, founder, product, the interconnected graphs, like I said, that's where the personalization happens in the VC thesis.
Is there an insecurity that you have as an individual or a fund?
As a firm, now, no. We did. When we launched Fund 1, we were trying to raise 50 crores. One guy went to his office, he made me wait. Then he gave me like a 10-minute meeting while he was eating lunch. He was eating lunch and he said, send that fellow in, right? So I started to explain, sir. He stopped me and he said, 50 crores, is it? I said, yeah, 50 crores. Your fund size is how much fee I make every year. You have no hope, man. You should just raise the money, give it to me. I'll pay you a commission. Don't invest. Why do you want to compete with VCs like us? Go do something else. Join a startup. I'm paraphrasing, but that was like 5 minutes of what he gave me back. Right? And I said, okay, thank you, sir. Thank you for the feedback. I hope we'll meet again sometime. You can't ask anything after you're told that. It's fairly condescending. Look, I'm not some Joe from the street. Right? I'm a reasonably smart guy. I'm ultra competitive. Anyone should sit across me or an animal like me and say, if it works, he's going to be a tough guy to say this to now. He might remember this. Like this is some... I went to a boys' school where you're always sizing everyone up, right? You're not taking risks with people you don't know how to predict. That was VC in India 2015. There were a few VCs. They're all gatekeepers to capital. Every founder had to come to them. You could take months with a decision. And even after you invest in a company, you're not doing anything to make the founder's life easy. You're not giving him introductions. You're not helping him hire. You're not doing interviews. You're not bringing clients. You're not informing him about pricing. I gave you money, man. It's your problem now. Make it work. Right? Every board meeting is like this condescending, no, it's not good enough. It's not good enough. It's not good enough. I've been in those board meetings when I was working under a founder, right? We've had VCs like that. So the power capital had, because it was so scarce and there were so few gatekeepers, I think that is gone away now. There's more capital, there's more competition. Founders have more choice. And now the founders that those VCs said no to back then, when they come and start the second company, they're not going back to these guys.
Yeah.
You see that all the time.
Yeah.
Right? And I think they're willing to give a shot to new firms like us. So we realize the hard way there's a big problem founders face in India when it comes to capital. VCs are difficult people in general. I'm generalizing.
Yeah.
A lot of them are good, a lot of them are not good.
What is your personal relationship with money?
I think of myself as an intellectual athlete. And money is the medium I swim in. I treat everyone around me, even if they're not competition or competition, both, right, as athletes also. And so I judge from an athlete's point of view. How many goals did you score? How many companies you said no to that made it? Right? I ask weird questions. I know that I shouldn't fall for my own success bias because you're only as good as your last game. If you didn't score in the last game, your last fund was bad. Doesn't matter if your 3 funds were rock stars. You had a bad fund. Explain yourself. I think that frame of mind makes money a little bit more of an instrument for me. And I'm comfortable. I don't want to be a billionaire. I just don't want that hassle. And I don't know what to do with the money, to be honest. For me, it's knowing the history and being an animal about avoiding that. It's about helping another set of people in my community who are in that situation still today, right? As much as I can. That's why I earn money.
3 startups that you think very highly of outside your portfolio.
Yeah. Postman, I think, is one of the best startups of our generation. I think it doesn't get the credit it deserves.
I've heard that.
It's one of the best dollar compounders in Indian venture history. Second one, I really like Zerodha. They're also Konkani. I'm Konkani. The 2 Kama brothers doing what they did. Tough background, by the way. No way of knowing it would work. Scarily bad competition.
Yeah.
Those are not institutions you mess with. The sheer volume of hate that came their way when they brought the zero commission model and then making it, and they have more profits than the rest of the 10 big institutions who are after them.
Yeah.
Right? That journey for me is an inspiration. Third, I think there's something that I will say a little bit controversially. I think the Byju story, because I was reasonably close to it. I got to see the rise up and what the problems after. I think the audacity he had.
That's
to
true.
say, I'm a tuition teacher, but I'm going to be the best education company in the world.
Yeah.
Right. And go to 20 billion and the most valuable tech company. I think, I would not have believed that was possible in India.
Yeah, true. He put EdTech on the Indian map, for sure.
And I think even Zerodha, right? They're very different types of companies, very different people.
Yeah.
But Zerodha now, when Nitin tweets that fintech TAM is only this much, the whole industry shakes.
Cool. This is good. I feel like you should do this a lot more.
I told you
with whatever I saw online, it was very different, right?
Right.
I mean, the insight of the history, the background, where things stem from, that was very revealing.
Yeah.